Hey everybody, it's John King. It is Friday, the 9th of January. We are kicking off this year with a bang, and I am super excited to be joining you to talk about it today. So lots of news, lots of things that are happening, and let's go ahead and kick it off. So first of all, if you have any questions about anything at all while I'm talking, feel free to post it into chat. I am pulling up my info right here. And if you, oh no, I don't know that I have all of it here. Anyway, that's fine. No, I don't have it. All right, that's cool. Anyway, I'm a little off kilter. Give me 2 seconds here. All right. Let's just move on. I can't find my little banners here. I normally pull them up, but I don't really care. We're going to talk about what's happening right now. Huge news. Couple of things that happened in the last 24 hours. So just about this time yesterday, President Trump said he is instructing his representatives at Fannie Mae to inject $200 billion into the mortgage market to lower interest rates. So here's the thing. Hold on. Okay, so my team's jumping in and putting in those banners for me to help me stay on track. But doesn't matter. I'm going to tell you right now. We're gonna roll with it. So Fannie Mae is the buyer of mortgages. They're the ones that basically the federal government, the department within the federal government that buys mortgages. We're going to start over. Zen. Here we go, John. President Trump announced yesterday that Fannie Mae is going to put $200 billion into making mortgages cheaper, to lowering interest rates. Now, here's the truth. We don't know if he can do it. We don't know what the regulatory process is going to look like. We don't know what the outcome is going to be. We don't know how quickly it's going to happen. But what I do know is that the market responded favorably. Okay. Mortgage rates fell significantly, literally in the last 24 hours. Now, significantly, and I'm going to share something here with you to show you what I'm talking about. We had mortgage rates. So let's go right here and share my screen. Mortgages are traded like stocks and bonds and all that kind of stuff. And so what you're going to see right here is you're going to see this chart. Are you going to show the correct chart? You're not going to. Man, I am just not having a great day with my technology. Let's go right here and let's go share the screen. And you're going to show the window right there. There we go. All right, now it's going to show properly. So mortgages, this is basically the up is good for interest rates. And so we're looking at a chart here that goes back to earlier this year. So actually early last year. So we're almost a year in this chart. And so as these numbers are down low, that's bad for mortgage rates. And so we saw mortgage rates being the worst that we've seen in a year, exactly a year ago. And then as we move forward, we saw rates get better, and they got better all the way up until April, and then they kind of got worse, and then they got better, and this is in July, and then they got worse, and now they got better heading up into September. And so you can tell right here, and I got a handy dandy little line here that I can put, and I can say, oh, from right here over to right here is a straight line. And so mortgage rates never went as high as good. Okay, this means low rates. So we had low rates in September, and then they came down off of there. And then they kind of went lower again, and they bounced right off of there, and they came back down. And then they tried to go as low, but they went up. So down means up on this chart. But what happened yesterday? Between yesterday and today, mortgage rates broke through that barrier. These barriers are a really, 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 really big deal. And so when you see something break through a barrier, especially if it closes on the other side of that barrier, which it did, meaning that rates are below where they had resistance, they tend to stay there for a period of time. This is super, super good news. Okay, so what it means is that we are going to have a run. We're going to have the interest rates moving lower unless something changes about what Trump announced yesterday. So what happens with mortgage rates, what happens with the stock market, all of that stuff is basically what I call buy the rumor, sell the fact. So mortgage rates fall based on what we think is going to happen because the traders are trying to get ahead of it. And so the traders yesterday heard Trump say, we're going to spend all this money to lower interest rates on a mortgage. Now, how long has Trump been talking about lowering interest rates on mortgages? Literally a year. Okay, he came into office, he's 11 days away from being a year in office. I don't care if you like him or hate him. I'm not talking about that. I don't get political. I'm being factual. So Trump said, I want to make interest rates lower. And so for him to make interest rates lower means he's trying to pull lots of levers. He's trying to figure out, what can I do? He's been talking for a long time about the fact that I want to change who is running the Federal Reserve, because he believes that changing who's running the Federal Reserve is going to lower interest rates. And so we have that happening. And in the next few months, Jerome Powell is out and Trump's trying to decide who is in. Now, guess what? That still doesn't give Trump control over mortgage rates. Trump does not get to tell the Federal Reserve chairman to lower rates. And the Federal Reserve doesn't control mortgage rates anyway. So we saw mortgage rates drop in the last 24 hours, and the Federal Reserve hasn't met, because this is what controls interest rates. Interest rates are controlled by bond traders, and bond traders are trying to make money. And so if they think the bond market's going a certain direction, they're going to buy or sell the bonds based on where they think it's going to go. And that means the bond market thinks Trump is going to succeed. Not succeed in politics. I'm not trying to get political. They think Trump is going to succeed in his goal right now to lower mortgage rates. And so they want to be ahead of it. They want to be buying rates at buying mortgages at a lower interest rate, because that's where the hockey puck is going. Wayne Gretzky said it, don't skate to where the hockey puck is, skate to where the hockey puck is going. That's how mortgage rates work. And so we have a big policy headline yesterday with Trump saying that he is going to have Fannie Mae spend $200 billion lowering mortgage rates. And that could mean a big shift. That could mean a little shift. That could mean nothing at all. It could be that we go down and we bounce back up. So the catch-22 is, do you wait? Do you wait because it looks like rates are going lower, and we could be 0.5% to 1% lower in the next 6 to 12 months? Could be faster. We also could be 0.5% to 1% higher if Trump is unsuccessful in getting this through, because now the market has rebounded. It's like a rubber band, and the more you pull the rubber band from where it's supposed to go, the harder it hurts when it snaps back. And so right now, things are looking good. But you want to look at, do I take a bird in the hand or wait for the two that are in the bush? Do I take advantage of this opportunity now? So if you're purchasing a home, the question becomes, do you move now or not? If you are a homeowner, the question is, do you take action now or not? I'll get to that in just a second. But there's one more piece this morning that mattered, which is the jobs report came out. The jobs report, which comes out the first Friday of every month, they skip it when it's right after a holiday. And obviously they missed it for the last 2 months because of the government being shut down. But the jobs report came out this morning, and there were fewer jobs created than expected. Now, there's two numbers that most people pay attention to. The number of jobs created. They expected 60,000, they had 50. They also revised some of the jobs created in November and lowered that down. But the second number people look at is the actual unemployment rates. So the unemployment rate is the percentage of people who want a job that don't have one. And so that unemployment rate's been climbing up. And it was about 4.6, and they expected to drop to 4.5, and instead it dropped to 4.4. Now, on the surface, that's bad news for mortgages. That sounds backwards, but if unemployment becomes a problem, the Federal Reserve needs to lower interest rates to spur companies to hire, to spend money. And so that's how they fix unemployment. And so if unemployment is not a problem, then rates will stay higher. It's the tug of war between unemployment will lower interest rates, inflation will raise interest rates. But here's the thing. The unemployment rate fell not because fewer people were looking, or not because more people got jobs. It dropped because more people gave up looking. It's the percentage of people who want to work that don't have a job. And so if more people just say, forget it, I give up, I'm not going to try looking for work anymore, I'm done, then they don't count anymore as an unemployed person because they're not actively trying to look for work. And so the numbers can be very, very deceiving. And that's this whole thing about the unemployment number versus the labor participation rates. How many people are participating in playing the game? It's like playing schoolyard basketball. Okay. If you have 4 people that want to play and you play 2-on-2, great, 100% of the people are playing. But if you got 10 people that want to play and you're playing 2-on-2, only 40% of the people are playing. The game's the same. Okay, so we didn't have more players on the court. We just had fewer people waiting on the sidelines wanting to play. That's the labor participation, labor force participation. Why does the bond market react positively to this? Because essentially what this is saying is, hey, mortgages have to find a buyer, and the more people that are trying to to invest in mortgages, the less they have to give a higher return, the lower rates they can offer. Okay, so mortgage rates fall when you've got more buyers on mortgages. That is the most direct way that Trump can actually impact mortgage rates, and it's likely to work. It's already working. Now, what does this mean for interest rates? It means that there's a really good chance rates are going down. But what it does not mean for interest rates is that it's guaranteed they're going down. There is no guarantee. The catch-22 is there's no guarantee this is even going to happen. And so what we have right now is we have a moment where we can make hay while the sun is shining. Can it stay shining a lot longer? It might. But the question is, what's better for you? Waiting and hoping and missing an opportunity or taking advantage? That depends on your circumstances. And so if you are a buyer or a homeowner, and you're in a position where you're saying, hey, I want to transact. I want to buy a home. I want to sell my home and move to a different one. I want to refinance. I want to pull cash out. I want to consolidate my debt, but I've been waiting. I've been waiting for interest rates to drop. I've been waiting for the right moment for this to happen. Interest rates are dropping. At the very least, you should start getting ready right now. You should call and talk to me. Scan this QR code up here. You should talk to me to talk about what do my options look like, even if we don't pull the trigger. But here's the deal. At some point in time, you don't know when you've hit the bottom until you've bounced off the bottom and you go up. And I'll tell you from experience over and over again with people who wait for rates to drop, they go through the exact same process every single time, which is they say, oh my gosh, rates are falling. I'm going to wait for them to fall even further. Even though they said, while rates were rising, man, if rates would just fall again, I would transact. So, okay, rates are falling. But now they say, well, gosh, if they're falling, I don't want to miss out on them being lower. So therefore, I'm going to wait for them to fall. So then they fall. And let's say they fall from 6.5 to 5.75. And they say, well, man, but I don't want to do something because maybe it's going to fall further and it's going to go to 5.25. So I'm going to go ahead and keep waiting. And so from 5.75, instead of falling to 5.25, it goes back up to 6. They say, oh my God, I just wish that I would have locked when we were at 5.75. Well, the only reason they wish that is because they now know 5.75 was the bottom. And so they now go up to 6 and they say, well, okay, but if it hits 5.75 again, now I'm going to lock. And then guess what? A week or two or a month or two later, and it drops to 5.75. And then they're going to say, wait, but it could go lower. So I'm going to wait. When do you ever jump off the roller coaster? You have to decide, do the numbers make financial sense? If they do, then do it. Especially if you're buying. Because if you're buying a home, then you don't have the flexibility of saying, oh, you know what? I will wait until the rate is perfect and then it'll be easy to find the perfect home. That's not how it works. You find the perfect home and then you take action. And so when you think about the process of waiting for rates to fall further, you just got handed a gift, which is rates are lower today than they've been at any time in the last 3 years. Now, they might only be a little bit lower. You might say, well, John, I talked to you 2 years ago and they're basically the same. Well, they're a smidge lower. So rates are the lowest they've been. The market is as good as it's been in 3 years. We've touched this level multiple times, but it's a little bit lower. And the question is, can we go quite a bit lower? We have broken through that glass ceiling or that glass floor for interest rates to fall through that we've been bouncing against for the last 3 years. And that historically has been a big shift in the market. And so I felt the earthquake overnight in the mortgage market and in the rate market. And I'm trying to impress upon you that we have seen a big shift. Now, the question is, will we stay here? And that has to do with whether Trump is able to execute on his plan to inject $200 billion into the mortgage market. But here's the short-term answer. The mortgage world believes it's going to happen. And so until we're told that it's not, we're going to continue trading and lowering rates or keeping rates lower in an expectation that it's going to happen. And so this window is open and it's going to be open for a little bit of time, but as soon as it slams shut, it's shut. As soon as Trump says, or we are told he can't do that, it's impossible to be done, which a lot of things that he's has tried to do, the door's been shut. Today, we were supposed to find out from the Supreme Court whether they were going to say that Trump's tariffs were illegal and couldn't continue. Now, they didn't make the ruling today. I didn't dig deep enough into why, but they didn't make the ruling today. But Trump's doing a lot of things that he's put into place. Again, I don't care whether you like him or don't like him. I'm not telling you whether I like him or don't like him. I'm speaking factually of what is happening. He's putting things into place that sometimes never come true. Sometimes they come true, but they get repealed. And sometimes they come true and they stay in place. We have no idea if this announcement from yesterday about spending $200 billion to lower mortgage rates, we don't know what category that's going to fall into. But what we do know is the market believes it is going to happen. The mortgage market has shifted, and we are seeing interest rates starting to shift down. And so do not wait. Don't sit back on your heels and wonder, man, maybe when it gets to this point, I'll call John. Call John now. Okay. Talk to me about what your options would look like. Even if it's not time to make it happen, let's get a game plan so that you're ready when it is time to make it happen. And we know what it's going to look like to achieve success. Guys, the final thing I'll tell you is volatility. The winds have shifted in our favor, but the winds can shift again very, very quickly. And so from a market perspective, don't sit back and just assume everything is rosy and that everything is going to be rainbows and butterflies. It is certainly the dawn of a new day when it comes to the direction that mortgage rates are going. Because up until now, we had pretty much all the pressure against mortgage rates was to push them up. And we finally have a strong pressure to push mortgage rates down. And so that is critically important to understand because that pressure can go away in an instant. But right now, I feel like it's here until we're told otherwise. Now, that sounds silly to say it that way, but the assumption is this is going to happen. The assumption is that Trump's plan is going to come to fruition, that he is going to inject $200 billion into the mortgage market to lower interest rates. And that's an opportunity for you to take advantage of it. The only way you can do that is to be prepared. So allow me to be your guide. Allow me to help you to figure out what the path is going to look like. Scan that QR code, schedule a time to meet with me, give us a call, start the application process. Don't sit back and say, I'll do it tomorrow, because every day there's another tomorrow. And I talk to so many people that say, man, I wish I had gotten this process started sooner. All right, guys, that is about it for what I've got. If you have any questions, feel free to post them into chat. If you are watching live, if you are, and I'll pull them up on screen and I'll talk about it. If you're watching recorded, post it into chat and I will go back later and respond to your comment. I really appreciate you all joining me. If you have questions about anything at all, mortgage related, housing related, I look forward to being your guide, helping you to answer those questions. I hope everybody has an absolutely wonderful weekend and we will talk to you soon. Bye-bye.